Lights TV show?
Oh,
Not yet.
well,
Not
I think we're
yet.
gonna have to get bigger than, 70 people to make
Yeah.
that happen, but
Well, you
Yeah.
just got to spell it
we're
different.
trying.
Spell
It's FNL. Yeah, that's what it is.
Yeah, FNL.
All right.
Hi, everyone.
Hey,
Hi,
Denise.
Denise.
Hello.
Uh, Jason, we are recording.
Hey,
We are
Denise.
recording? Okay.
Yes.
It says record here.
Yeah,
Yeah, we
I'm
are. All
recording.
right. All right,
Yep.
cool. Well, welcome everybody. This is Friday Night Lights. As you may have heard a few minutes ago, we tend to start this call about 5, 6 minutes after the hour. We run the call from 7 to 8:30. And like Teresa had been mentioning, we run this call for about 2 years now, maybe even a little over that. The call it started a long time ago. We were actually using it to pitch deals. Teresa had a deal in Texas, and we were actually using it as an investor call. And that deal went in a different direction. And we decided to keep the call because we were actually getting a lot of folks who were interested in learning about what we had been doing and how things were going. And so we started actually doing this call on a regular basis and really trying to bring value from one, what we've learned, two, we bring guests on. Like last week, we had Catherine on who did a fantastic job talking about AI and real estate. We also do bring opportunities where folks can pitch their own deals. We talk about things that we have been doing. We did a series at the beginning of this year where we had put a contract on a property, and every single week we brought what we had to deal with as we went through that whole contract process. And so that's really the crux of the call, why we do the call, and ultimately it's really just to pay it forward and to help people grow in real estate. Uh, we do always disclaimer that we are not SEC attorneys. We are not tax consultants. We are not financial planners. So everything that you hear on these calls is for educational purposes only. And tonight, what we thought we would do is a couple things. So we did finish the purchasing of the Haven a couple weeks ago, and we actually met with the property management team today for kind of just the insight of what's going on, what they're dealing with, and so we wanted to walk through that. The other thing we wanted to talk to is we obviously have a debt fund that we're raising capital for, so we're going to give you a little preview of that if you haven't seen that before. And then last, we want to go through some deal flow. So we get pretty significant deal flow on a regular basis. Tim really goes through that deal flow, and then we kind of meet every Tuesday and walk through that stuff. And we make offers on different properties, right, based on how that property underwrites. So with that, we can kick her off with really talking about the property management and kind of what we learned today. So I'll kind of start off and then the whole group will kind of chime in on what we heard. We literally got this update 5 minutes before we joined. So we had a call 30 minutes before this one. And we pretty much went the entire time. All the information that Ashley gave us, who's part of our property management company, who has been on this call before. Some of you have seen her. They do an absolutely fantastic job. One of the great things about this property management company is not only are they extremely detailed, but we are also able to manage properties significantly lower than most property managements that you kind of head out there. So first thing she said, going through my list here. So obviously when you first take over a property, it can get a little bumpy with occupancy. So we were sitting at 95% when we took over. That dropped by 1 unit, so it puts us around 93.6. The reason really is just going through and making sure that the residents there are actually there and going through those apartments. And we had to clean out a couple apartments, and we really just got those set up so that they're ready for a rental. One of the curious things that came out of that was, so the property is in St. Louis. It's in the Maryland Heights Cleve Court district. So the property lines are a little weird, but it kind of falls under the jurisdiction of Maryland Heights. And Maryland Heights requires an occupancy permit for every unit turn. So that's kind of a new thing that we've not had to really deal with, nor the property management team, because usually you don't need a permit for occupancy for every single unit you turn. And so that's a new thing, but it's a cool thing to learn. It's something that we're able to do, and it's really the first thing that we really kind of experienced with this whole property was, hey, look, you got to get a permit every single time we turn a unit. Um, what else, Teresa? What else do we have?
I mean, basically we're just moving through the process. Everything seems to be, pretty much what we expected. There were a few little bumps in the road. I think
Mhm.
that's just expected. I mean, that's what happens every time you take over something new. But for the most part, we've freshened up some things, been talking to all the residents. We've got now leasing flags out front, so we'll have those others filled up, very quickly. There's a couple that we're doing a little more, as opposed to just a make ready on. There's a couple that needed some new flooring put in and had never had the floorings because somebody had lived there for quite some time. And so we took out the old carpet, put in the new flooring, and then are just able to get those, freshened up and ready to go. She said there's been a lot of demand for the the two beds, two baths. So, which we anticipated. That's not a surprise to us either. So, we're just continuing to work through the vendors, making sure that our people get trained. I was able to go to the property the day after that we closed and was able to meet the new property manager. Her name's Barbie, and there's another girl there, Belle. So it's Barbie and Belle, believe it or not. That said, I said,
They're
you
from
guys
the
are making
Disney.
up those names.
Yeah,
Come
they're
on, you're
from
just
Disney.
messing with
Yeah.
me.
Mm.
But
Uh,
no, they're learning the new programs and our systems for property management, how we want things to run, what we tolerate and what we don't tolerate, which more likely is what we don't tolerate, in order to give everyone a fantastic living environment. So things like there's some uncollected rents, $60,000, which seems like a lot for the month of August. Well, what happened is that the previous owner didn't shut off the automatic payments. And so guess what? It went to the previous owner. So all those little kind of things, we're not surprised. I mean, those kind of things are just going to happen when you take over a property that's this size. I mean, just either things that got missed or, got missed, whatever. So
hmm
we're just working through those things. I'm sure Laura and Tim probably have some other thoughts on other things that Ashley mentioned.
yeah. So the one thing I mentioned, Barbie, that Priest just mentioned, she was hired new for this property, but she's got 20 years in the property management world. So she's got a lot of experience that brings to it. And then Belle, who's newer as far as experience goes, but she's been living at the property now for several months. And so she had a good background, a good history with a lot of the tenants, and that's been helpful getting started. So that's gone well. Ashley, who is our main manager for the property management company, she's actually been living over there, and she plans to be there till about the second week of September. Hopefully, that we'll kind of get this stabilization period done by then. And she kind of wanted to go through a couple of rental collection periods to help them out, mainly so that she knows that the people are the new staff is learning the new systems and until they kind of give that muscle memory and can remember how to do it. We're also working on a couple of maintenance items, such as some porch work we had to do and some concrete work that's getting scheduled now. Um, she talked about as far as the rent increases right now, while we're going through this stabilization with the occupancy and all that, we're going to hold off on any kind of rent increases or anything like that. Doesn't make much sense to do that right now. So they've got a plan, on kind of how to start implementing that. So yeah, that's Laura. You got anything?
Yeah, just Ashley's amazing. She's working through all the logistics of scheduling with the city inspectors, right? All the different uh what departments that need to come out and inspect like the pool and inspect the apartments for a new tenant going in. And it's crazy because they only come on certain days of the week and then to to schedule the opportunity for someone to move in, as you know, after. It's just the logistics. I was impressed with Ashley and being able to do the juggle. Um, we also had to hire a new groundskeeper, um, because the other one did not also do work through the winter and shoveling snow. So we hired a new one that is all encompassing for summer and winter. So yeah, but Ashley's doing great. I'm impressed with our management team.
Yeah. Um, so some of the things that we will be making changes. So some of the stuff she talked about. So today they charge a flat utility fee. So it's a $250 flat utility fee, no matter if it's a 1-1 or a 2-1. Kind of doesn't make sense because if you have a 2-1, you tend to have more people within the property. So what they're going to do, once it's all stabilized, is really charge a $15 fee per occupant on top of that. Because really, if you have a 1-1 and you have a spouse or someone else in the property with you, it's just another way to make a little bit extra just to cover those payments until we're able to get enough data to see how the actual utilities are running so that we can really figure out whether or not that 250 is enough and whether that additional $15 is enough. Um, and then it's all not always wonderful. When Ashley found out about there was an apartment that apparently there was a tenant that had been put up in a hotel. And so basically, as soon as we took over, we found out about that and immediately went into the apartment to see what was going on. And apparently, there was a leak. And it's one of those leaks where I don't know if you have an ice maker on your refrigerator, but if they use the plastic tubes on those, it's very hard to find to detect. And so it took them a long time. It'd been multiple attempts looking for this. She continued to complain. Eventually, they put her up in a hotel while they tried to investigate. And they ultimately found this leak in the ice maker on that little plastic tube, right? Because those things are only good for maybe 5 years. I've had them before. They obviously went back, they fixed it, they replaced it with one of those stainless steel braided ones that you usually put on a washer. That's what you should do because those are lifelong. Those are ones that'll last a lot longer and really remediate that. Then they put a bunch of um, dehumidifiers. They cleaned up a lot of this stuff and they're really getting that place back and ready. And so it's really trying to work with that tenant to make sure that she feels like it's a good place. They're working right now to try and figure out. It's gonna take at least 60 days because they have to make sure that there's no mold in the unit and that everything looks good. And it's one of these things that was kind of a surprise. It was left over, was never disclosed to us, and so they're going in there and making sure that that is done and that the tenant is good. And if not, we will work with the tenant to try and figure out how to get her somewhere else while we fix the property. So it's always not rosy. There's a lot of things. This is a business. You're running a business, so there are expenses in that business, and that's one of the things that she did mention to us. But for the most part, it's really been really good. It's been helpful to kind of have Ashley there, pretty much living there on a day to day and really getting everything ironed out. And like Tim said, she'll be there till the second week of September and is actually going to come back in October to make sure that everybody's actually following up on the training and all the things that they've learned over that last 2 months.
Denise, she found out by word of mouth, just by talking to the residents. That's how
Somebody
she knew
mentioned
that she was living in the hotel and that there was a problem in her unit. So
Yeah.
there's always things that they say, brokers lie, sellers lie too. We had
Yep.
no idea. She didn't know until 3 days after she'd been on the property and she was just chatting with people and they told her.
So just things to look out
This is
for.
all great to hear.
Right.
You know, I mean, yeah, it's going to happen to all of us. There's the good and the bad, and you just work through it.
Yeah.
So
And,
I
luck-
appreciate you sharing
Ready
all of
for all
this.
those unexpecteds.
Yep.
yeah, and luckily the unexpected for us so far is not near as bad as it. I've heard other stories, so I think we're getting off really well right now.
Good. Good. I'll let you continue.
Thanks, Denise.
So these are just things that y'all should, as you're looking at properties, buying properties, there's definitely going to be things that aren't going to be disclosed to you. Teresa talked about the $60,000 and then the property or the apartment we didn't know about, right? So two things they never decided to disclose to us. So it's just things to be aware of,
And
not big things. The 60,000 is easy to get back because they just need to transfer it back to us. And then the tenant, obviously, we have to figure that one
yeah,
out.
Wynn, good question. Why not move the affected tenant to another apartment? At that time, when that happened, we had a moment there where occupancy got up to 99% because we moved our new manager in, and that boosted. At one point, we said, "Oh, occupancy's at 98, 99%," and so we didn't have a unit. There's 2 units right now that are packed with furniture. Ashley said they were working on getting those done. So there simply wasn't a unit at that time, even though, now we're down to 93. That takes in effect the ones that have furniture in them, the one that, is empty now. So I mean, obviously we're, 93, we've got 95 people in there. So, I mean, when you've got 106 units, pretty easy to keep track of the occupancy. But that was the reason at that moment there was not any. And it was an elderly lady who had congenital heart failure, unfortunately. So there's other extenuating circumstances. So I think that they probably just tried to do the best thing. And again, this was previous owners, so we can't really speak for why they did it at that time. But knowing the occupancy, I would say that's probably the best case answer. Good questions. Any other questions about this topic before we move on, or any kind of operations? I mean, obviously we did due diligence. All of us were there at the property. We walked through these units. We, looked around, we observed, we looked for issues or problems, but some things just, aren't going to present themselves even if you do the best due diligence in the world. So definitely things that, you learn and could happen the next time, but maybe ask different questions in order to get better results. Did we walk again prior to closing? We did not personally, all of us, our team, but Justin did, along with Ashley. So us four did not walk the property prior to the actual close, as you would normally do if you're, closing on a single family home. But they did.
Paul, you have a question?
Yeah, it's unfortunate, those poly lines. I've run across that in construction.
Yeah.
You guys may have learned it the hard way right now through this. But if you guys look underneath, they always have to connect to a source, right? So maybe on your checkoff list through due diligence, when you look underneath sinks, look for how they connect to the angle stops, the water shutoffs, to see whether it's copper, stainless, or a poly line, and that might help you know what's there and what's not there.
Yeah, this was kind of like a freak thing that happened between when we did due diligence and then when we took over the property. So it
Sure.
happened in between.
Oh, okay.
That's kind of where it was like, and then you're right, right? The poly lines are, I mean, and it's hard to detect. Ashley was telling me she had experiences where sometimes you pull it away and there's no water because all the water is feeding behind the wall, right? Because you can't see the leak. So it's just something to note for everyone here that those poly lines, to your point, like something that you should probably take note of as you're doing your due diligence and
Absolutely.
thinking about replacing all of those.
Yep.
Grady's got a good point of putting all those lines on deferred maintenance.
Exactly. Tyler.
Hi, just wanted to say thank you for having us all here too. This is a great call. I appreciate all of you. Um, I actually just well, when you say poly, this is actually just kind of a two-part question. Were you talking about like polybutylene, or is that the poly that you were talking about, or am I hearing it correctly?
It's just
So
that
it's a
little,
little
it's just the little
plastic
plastic
line.
tube
Yeah.
for an ice maker that you run to your,
Oh,
So
yeah.
if you
yes.
like when you buy a
I
refrigerator, usually they give you the little tiny plastic line that goes to the water maker that turns into the ice and the water. Those should be replaced with with the metal braided ones that you hook to the washer.
Awesome. Yeah, no, that makes so much more sense. I was trying to
Yeah.
put two together. But so my actual question was, what was your first, are you going to do anything to like your first, is there any like CapEx plan, like maybe do something to the major walking areas, or like what's your first plan of like maintenance or deferred maintenance? Like what's your first plan for CapEx, if there is one?
So, so we mentioned that a while ago. There's some porch work that needs to be done. There's a little bit of, like woodwork around the exterior. And then we found a few places where there's some concrete work and some walkways and on some stairs and that type of thing. That's the first order of business to get those done. It what really is not a large list of deferred maintenance type items, so which we felt good about. Then after that, we're going to kind of talk about it, and we did have some larger items kind of in mind, but we're going to kind of weigh those as we go, like maybe looking at the laundry room, the common laundry room, and maybe expanding that or utilizing some space in the clubhouse. There's a lot of unused space in there that we want to take better advantage of for the tenants, and maybe even some rental space where they can rent out activity centers, that kind of thing. So
Awesome. Thanks, Tim. I appreciate that.
sure.
Yeah, a lot of when people take over properties, a lot of people either do something that everyone can see, right? So it's like, oh, the new owners are coming in, they're going to take care of us, and
Right.
usually helps with like reviews and stuff. So that's a great idea that you guys are doing that.
And
And
Tyler,
again,
I don't think you've heard us talk about this property prior. So one of the things that we have planned is to change the unutilized basketball court into a dog park. And when we did due diligence, we actually walked through each of the units, right? And we found out that many tenants had dogs that were not listed on their rental agreement. And so this is going to be great for them because they're dog lovers, they have dogs in their family. And it also helped us bring in another added revenue, right? Because they were not utilizing that, the prior owners.
I like that. It's kind of you're adding value by adding the dog park, and then also like, so we made you a dog park. We got all that ready, so we would appreciate it if you could actually pay that fee now. I like
Right,
it.
right.
That's
Yeah, and
that's
like
good.
Tim said, we're going to expand the laundry room, and we originally planned on putting washer dryer units, like even stackables or maybe a single uh, wash dry unit in under counters or somewhere in inside the apartments. But during our walkthroughs, we found that there was no place that was going to justify that for them losing the amount of space that they were going to lose. And the tenants said they like to congregate and visit. It's more like a communal commun within the tenants. They like to visit with each other. So we're going to offer that larger laundry room for them to visit, maybe put some tables and game in there for them so they can, have those moments to share with each other.
So the reason we're expanding that laundry room is actually a response to the comments because that their biggest complaint is there just wasn't enough washer and dryer units in that laundry room. It is pretty small. So so it's kind of a response to us listening to what the tenants said they wanted.
Mhm.
And a space for them to gather because they like
Awesome.
each other.
It's a great ideas. I love that. Thank you very much for sharing. I appreciate
Yeah,
it.
absolutely.
Right, Sean.
You're on mute, buddy.
There
Is
you
that
go.
working?
Yeah.
Yes, sir.
Okay. Two questions. First question.
Just put yourself back on mute.
So sorry, my
There you go.
daughter's over here, Carly, touching things.
Sorry. Carly.
Yeah, that's my
Blame
little
it on
business
her.
partner there. Yeah. So anyway, so my first question is regarding the due diligence, regarding the inspection, when you hire a company, it's still a new concept to me as far as trying to understand what kind of costs are associated with that inspection and what you get out of it. Are they just producing a report for you? Are they
They do.
going to walk through the property with you? What does that look like from what you guys have experienced? And are they charging like per door, per hour? What does that look like so far?
We didn't
So,
hire anyone.
so,
Okay.
Did it all
so
ourselves.
we have an in-house property management company, and
Okay.
your property management company typically does your due diligence. Most people will either use the one that they have. Sometimes you'll hire a separate property management company other than the one that's going to manage the property, just to make sure there's an honest look at it. But since we have our own in-house, when we did it ourselves, they actually
Right.
brought their team. So we brought their whole team, and then we actually joined them as well. So we had about 13 people on property that day, everybody on our team doing the walkthroughs.
Okay.
Now, so we don't really have a separate cost for that from our standpoint, which
Right.
for us it would be at cost. But I have heard other people hiring third parties of anywhere from, and of course it's going to depend on the size of the property as well. But for
Sure.
one like
Sure.
a 100 unit one could be anywhere from 5 to maybe 10,000. And
Sure. Okay.
if you've got, there are a couple of them that I could give you some recommendations for. I've seen their reports, and they give you an extremely thorough report on every aspect of that property physically, in terms inside and out,
Right.
and all the stuff that they, and all the recommended repairs or whatever else, and the estimated cost to do those as well. But you also got to
Okay.
keep in mind that the due diligence also includes the financial side of things, and the paperwork and that kind of. You got to have somebody that can come in and audit all of the leases and all the financials and all that as well, to make sure everything lines up with the rent rolls and all that. So there's actually at least two different components to due diligence that you want to make sure you get done. And sometimes that may
Okay.
be a different group than the one that does the physical due diligence. So
Okay.
Yeah,
Gotcha.
and on that, just to further elaborate, we had a property 2 years ago that we did due diligence on. We didn't end up closing on the property, but we, just like this situation, we did have a third party management company come in. It was who we intended to use on the property. It was a huge property. It was over 400 units. And so, unfortunately, there were a couple things that we did wrong in that thing. Number one, in our purchase and sale agreement, we weren't clear on exactly how long they had in order to be able to get all of that information to us. So, we
Gotcha.
had a little bit of ambiguity there, easy for me to say, that we weren't clear on. So we definitely were better, this time in doing that. And we had kind of a mess, right? As you can imagine, I mean, you've got a company who may or may not be taking care of business. And so when our property management company went to look at leases, they were looking at some of them were online leases, some of them were written leases. There were a lot of things that weren't documented properly. They had pets or didn't have pets. So all those kinds of things are very important. And those are things that really make a difference when you're trying to decide, is this really the value? So it's definitely, as Tim said, it's very important. And they were really good about giving a spreadsheet. So when they walked away from the due diligence, we knew exactly how much everything was going to cost us. So it was flooring in 100 units that we needed to replace. It was deferred maintenance on the windows in 50 units. And they literally had everything detailed out. So it just depends on the size of the property. Now, that was very expensive. That due diligence cost us almost $20,000.
Okay.
Most of the time, they're more in the $6,000 to $10,000 range for a smaller property. But there were a lot of days where they had to go back, they couldn't get keys, and that kind of thing. So there were definitely things we learned from that first one that would help us going forward.
And then are you also walking through occupied units? Like, do you schedule a time to go through someone's apartment
Yep.
just to
Yes.
make sure there's not leaks and all that, make sure it's not mold and whatever?
we do them
Yeah.
Right.
all on the same day,
Okay.
and they put a notice out to all the tenants on the day we're going to do that, so they're all
Okay.
notified ahead of time. But yeah, we just go around and knock on the doors and tell them we're coming in to look. So
Yeah.
Okay.
So we did go through every single unit. We took pictures. We took pictures under the sink. We took pictures in the bathrooms. anything that we saw. We talked to the residents in the home and asked them, hey, any problems with anything? We took pictures of the electrical boxes. Like we went through everything and documented it. We have an app that we use, so we could basically
Okay.
mark the number of the unit. So we're in unit 100. We go in the unit, we document everything we saw, we type out anything that we say, and we talk to the
Okay.
folks, add all that in, and then we go on to the next unit.
So
That's
that
how.
app, does that have a checklist then for you, things to look for, so you make sure you're not missing
Yes.
something?
Yes.
Yes.
Yeah.
Yeah.
Perfect. Okay.
Yeah.
Is that an app you guys built, or is that a service that you
It
purchased?
is. It's one
It's an
we
app
built.
that we built. Yeah.
Okay. Is that something you sell?
I don't know. We haven't thought about that.
Yeah. All right.
But
So my other question, I've been asking a lot of little questions, is Carly and I are just kind of last minute realized, hey, we should take advantage of the people in Arizona here at the Limitless Expo. So we are making our way there. We didn't go to the expo, couldn't afford it. However, we're gonna go see who we can meet. So I don't know if there's any people there that you guys would recommend trying to find and get to know while we're there this evening. And we're going to go again tomorrow evening. I know Jana Houston will be there, and so we're going to meet up with them at 8 p.m. tonight. But just looking for advice on who to connect with, people who could help newbies like the two of us in our area. That's
I
something you
don't
can
know
think
anyone.
on or text in the
Yeah,
message there
I
or
can
something.
definitely we can text you if you can think of any. I don't think I know anybody. I was actually going to go to this. We actually talked about this, but and
Ken
it just didn't
McElroy.
work out.
Hunt
Yeah,
him
Well,
yeah,
down.
look for Ken. Yeah.
Yeah.
And yeah,
so
for
Sean, I'll
sure.
tell you, you're it's going to be hard to beat this group,
Yeah.
but
That's right.
if we can think of anybody else, we'll tell you.
All right.
Robert Kiyosaki. See if you can get a hold of him. I think
Yeah.
he's there.
And I just want to make it clear, I'm wearing a hat so I don't get confused with Sid. Otherwise, we look exactly the same.
Yeah,
Right,
we
cousin
do.
Sid?
That's perfect.
See, now you can't do this part.
Hey, Sean, somebody asked a question. Where is that event? Do you know what's the location of that?
It's in
It's a JW Marriott,
JW, yeah.
Marriott in Desert Ridge. So it's like basically North Phoenix, Scottsdale area.
Yep.
So yeah, I'm like, shoot, there's people there. I know I don't have a pass to get into the conference center, but they got to walk out eventually, and I can say hello. So
Yeah.
I love it. You're crashing the party.
that's right. This is part of showing up. It's what we can do. It's what we have available to us, and we're gonna take advantage of it.
That's right. Stock networking. So it's awesome.
That's right. Yeah.
All right. Great questions. All right, Travis.
Hi guys. Can you hear me?
Yes,
Yep.
sir.
All right. I put an event there in the chat for Kansas City Monday too. I think Tim's going, right, Tim?
Yeah,
But-
Teresa and I are both going.
Okay, great. I didn't know if anybody else was. Anybody else? Okay. Anyway,
So I guess for context, if you don't see it, right, it's a multifamily event that's in Kansas City, right? And it's one of the
Yeah.
biggest multifamily events for the Kansas City area, correct?
yeah.
Right.
Tickets
It's
are
one of
going
the, it's one of the better ones. It's only on a Monday afternoon, so it's only half a day. But what we were told from the brokers, that's probably the one that's the most worth going to, and it happens in Kansas City. So
And we're going to look at properties.
yeah,
Yep.
I'll talk about that in a little bit.
Okay, great. So I got a ticket. Unfortunately, I talked to Patrick Skiles. Some of you may know Patrick. He's not able to join these calls because he's always working during this time. He's in Kansas City in Graham's group. And we've got a mutual friend that passed away that we're gonna have to go to his funeral, so I'm gonna miss part of the event for that. It's a real close friend. So anyway, anybody that's interested, if somebody wants to pretend to be me the last half of it, I could probably give you my thing, but I don't know what to do. But anyway,
So I've stood next to you and you're like 6'6" and I'm like 5'7", so it wouldn't work. Sorry. We stood on stage together and it's like, oh, okay.
You could stand outside with my badge or something.
Exactly.
Okay. Um, the other thing is I invited a couple new friends to this meeting for the first time, and I won't embarrass them and bring them up, but they can introduce themselves later if
We could
if
say
they wish.
welcome.
Yeah.
Yeah.
And
Yeah.
I wanted to see if you guys could take a minute sometime to introduce your fund to
Yeah.
them. And
Yeah.
yeah, so just so they know about that.
Sure.
And gosh, I think I might have something else. Oh, I appreciate all the information you guys were sharing. That was great that you shared the real, issues that we're going through, and I really appreciate that. That's all I was going to say. Thank you.
Travis, thank you, and I'm sorry to hear about your friend.
Thank
Condolence.
you.
It wasn't
Thank you.
anybody I know, is it, Travis?
He was in my boy's Boy Scout troop. We were
Oh,
leaders together, and he was a Marine and just
oh, okay.
suddenly passed. So
Okay.
thanks. Appreciate it.
Very sorry. Henry.
Hi everyone.
What's
Hi
up,
Henry.
Henry? How are you?
You can hear me?
Yes.
Yes.
Yeah.
Oh, cool. Well, I want to say thank you for put this call together for us. It's amazing that we can learn everything about it. So thank you, everyone.
You're welcome.
Thanks,
Um,
Henry.
yeah. My questions comes on basically when you close on a property, I believe your team Legacy Group just closed a property like a weeks ago or something like that, right?
Right.
Yes.
Yes, sir.
Yeah, and how soon do you reach investors to keep it posted or updated about if any news about the property or any move that you do on the property, like to keep it updated, and keep it informed how everything goes about the property. This is gonna be my question about.
Yeah.
Sure. So, go ahead. Go ahead, Laura.
Well, these calls, if they're on here, but we also are communicating with them via emails. And then we have personal relationships with them too, right? Um, a lot of them will just text and ask, like I've been communicating with some personally and calling or texting, but officially email and then this call.
How often?
I think we'll probably have a regular, like a monthly report as well
Okay.
Right.
that we'll send that'll kind of give an update on all the key metrics that you want to know about and any improvements or issues or anything like that as well. So, but we'll try to, so it'll be on multiple levels. I mean, like Laura said, we'll probably talk about it on most of these calls every week if you're here, but we know that not all of our investors attend the call. So we
Yeah.
also we have an email, uh, regular email that goes out as well, or especially if there's a special announcement or something, but then we'll also do a monthly report as well and get that from our property management team.
Yeah, that was my question about it, how often you reach
Yeah,
investors. And because not everyone is available to be attending on this call.
right.
I
Right.
imagine. But,
Well,
yeah,
that's why you really got to do multiple levels and multiple kinds of communication because some people won't see the email, some people won't see the newsletter, some people won't see this call. So if we do it multiple ways, hopefully we'll get to everybody that way. And then, like Laura said too, we know most of the investors, and I talked to the ones that I personally got to invest, and I probably talked to some of them, every other day. So they're keeping up to date from me directly. So
oh yeah, that's amazing. Yeah, thank you for answering my questions. And thank you,
sure,
everybody. Yeah, thank you.
And then the other thing is some people, everybody likes to be communicated differently too. So,
right,
like, I don't know that I would personally want to sit on a bunch of calls, right? Like, send me an email, I can read the email, I'm good, right? I think that's what TR3 does a lot. They'll send like a monthly email update on how their properties are doing, and you can read through that. And that's great for me because it summarizes, and especially if you're busy or you just can't sit on a call. So,
Yeah,
most of the time, the groups, the ones I'm LP invested in,
mhm.
they'll usually send out a newsletter the same time that the distributions go out.
Correct.
So
Yeah.
oh yeah, that was good time to do it.
yeah,
Yeah.
Yeah, we
yeah,
could
usually because then people learn when they see their distribution, they know to expect some
exactly.
kind of communication. So
Oh, okay, cool.
Good question.
Thank you. Thank you. Thank you for answering, by the way. Thank you.
And our intention is to, once we, we're heavily looking at deals. I mean, we've looked at a lot of deals, and our intention is to just roll right back into the next one and walk through the process just like we did before, as we submit our LOIs and, do all that process as we get through it, so that you all can walk through that with us and ask questions as we go and learn. So we're anxious to get that deal, not only for ourselves, but also to walk through the process with you and help everybody be enlightened as to how that actually goes when you do it, day by day, week by week.
Any other questions about property management, the Haven, any of the updates? Any questions on questions? Okay. Travis, I'm going to kind of address your question about kind of talking about our fund a little bit. So Teresa's opening was perfect. I'm going to bring up what we have currently.
And Jason, why don't you tell a little bit about the fund itself, a little bit too, with investor and everything?
Absolutely. Get this out of the way. Okay. So about a year ago, we came together as a group and we created a customizable fund. So essentially, what this is it gives us the ability to um, have multiple opportunities for our investors without having to redo the legal paperwork over and over again. So we have one PPM that allows for us to have multiple deals. So to give you an example, the St. Louis deal, that was our first fund within our investor tool. It was basically created so that we can run the property through that investor tool. So the investor tool is basically an online tool that allows for us to share deal information. It allows for us to be able to automate the distributions. It allows for us to collect money, get documentation signed. It really is kind of an all-encompassing tool that we use to really secure our deal and keep all the information in one spot. The other cool thing about it is what I talked about before. It's called a customizable fund. So it's a little different. You may have heard fund of funds, blind funds. There's a lot of other funds, hedge fund, right? These are essentially funds that they pool a bunch of assets into a single fund and then they raise towards that fund, or they utilize it to capital raise for other things that they're investing in. For us, it's a customizable fund. So what it allows us to do is create multiple offerings within the fund that each kind of work on their own. So the Haven, the St. Louis deal that we ran, that was a multifamily asset deal that we raised for. This that I'm displaying here is what we're calling a debt offering. So part of the reason that we did this is we want to be able to bring multiple offerings or multiple asset classes to our investors so that you can continue to diversify your portfolio, but at the same time, pretty much stay within real estate. So the first one was a multifamily deal that is more of a long-term play. So you're going to have your money or your capital in that deal getting returns on a regular basis, but more for a 3 to 5 year hold. In this case, this is more of a debt offering. So utilizing the property we have today, we have a large amount of equity into those properties. What we are doing we would put a promissory note against that debt, of which we would return an annual percentage back to our investors. It would be a 12-month hold with monthly distribution. So it's a straight cash flow deal. Your capital is tied up for 6 months, not 3 to 5 years. It's kind of a way to get ongoing mailbox money, but without having to have your capital tied up for a long period of time. It also allows you a little bit of flexibility because you're in our fund. When we sign our next deal, you would be able to take your money and say, "Hey, I want to move that to a longer term hold, like the real estate deal, and move my money into that deal." And we would be able to do that. So it really is just a way that we can continue to come up with ways to be creative and offer different opportunities for investors. So there's a 6, 8, 10, and 12% return on your money based on how much you invest. So we have the under 50 category, the 50 to 99, 999, the 100K to right below 250, and then the over 250, well, we'll pay the different percentages out. So it's really just an opportunity to get your money in a place and collect some more return rather than sitting in a CD. I know a lot of us throw our money in CDs, 4.5% if you're lucky, but your money's tied up for 3 years. In this case, you can do it for 1 year. It's secured against real estate that we already own, so it's in a safer place. And then at the end of that year, you're welcome to take it out, or you can roll it into something else. So we really figured out how do we create something creative and also something that still stays in the real estate portfolio. And so this is what we came up with.
And from my experience, and I'm not going to start a debate, but I feel like that's really good return. So as far as not getting too risky, I mean, granted, you could do other things and get more risk, but hard to beat for that kind of a return regularly, right?
Mm-hmm. That's correct.
Anybody else knows anything better, let me know. But
I'm sure there are higher rates, but you know how it goes. Like,
well, yeah,
the better the return, the higher the risk.
8% is kind of common for that kind of amount, but for when you get more money and things, that's really good. So.
So there's a QR code there. You scan the QR code, it'll bring you to Avestor. You can go to our website and get to Avestor, which is thenextlegacy.com. It's just, again, it's just trying to bring value to investors. Ultimately, that's our goal. How do we bring more value? How do we be creative? And how do we find ways to help people see what else is out there? Even if it's opening your eyes to something and you don't invest with us, but you now have learned something new, that is extremely valuable for us to bring to you.
Also, Jason, I saw that Grady asked about how many other platforms that we looked at. I looked at several different platforms. I actually used Cashflow Portal previously, and I really like Cashflow Portal. Perry Zhang is the creator of that. It's very popular. There's a lot of Grants people, not Grants himself, but other people inside Grants Group that do use that. But I'll have to tell you, Avestor, the thing that sold us on that is the fact that it's all a package deal in that you get that customizable fund. And you can certainly, do that yourself with your own lawyers, et cetera. But these lawyers have already worked with the founders of Avestor to be sure everything is SEC compliant. And as my team knows, I'm constantly going, that's not SEC compliant. We need to check on that. That's not SEC compliant. Because that's my department. I know they get tired of hearing me talk about SEC, but Avestor brought that to the table, and the fact that we were able to create something like Jason just described that was just so sensible for our future investors, it just made perfect sense for us. So that's why we ultimately went with Avestor, but there's definitely others out there that do a great job. I liked Cashflow Portal. I personally have some of my own LP investments with people who use Cashflow Portal, and they're constantly making improvements to that as well. So there's certainly others out there, but ultimately that was the reason we chose Avestor.
So I wanted to say something about Avestor. So what I love about them is the multiple asset classes that we could put into our one fund, right? We have two because one's a 506C and one's a 506B. But our investors can come in through that portal, see all the different asset classes, such as the debt fund or the debt option that Jason just went over, and equity options of different multifamily properties that we're purchasing and operating. And at the end of the year, Avestor puts together one K1 for each investor, rather than having multiple, for each investment that they're in. And that's great. Catherine, also, we met her because she has a fund on Investors platform as well. And I know she's doing multiple different asset classes in her fund. So it's great and it simplifies everything for our investors.
But yeah, there's all kinds of ways to do this. Cheap ones, or I should say inexpensive ones, expensive ones, middle of the road ones. So there's definitely multiple opportunities. So do your own investigation, see what works best for what you're looking to do.
Can I ask a quick question on that?
Sure.
Have you guys had anybody transfer their 401k from Fidelity, not a self-directed, just their regular 401k money to it or anything?
Yes, I've worked with several investors that have done that. I think probably almost half of mine this time, maybe not quite, maybe 30%. Um, it was no problem. Worked with Equity Trust, Horizon Trust, Madison Trust are the companies that I worked with in order to get my investors moved over. So it was super smooth. We had no problems with a vestor. There were problems with, Equity Trust or whoever moving things in, but that's just normal. I mean, that's just how those kind of things roll. So yeah, it was a good issue. Good.
My question was not self-directed, but regular.
Oh, I'm sorry. I'm sorry. Just your own IRA?
Yeah. Well, from like a company's 401k, which is
Okay.
usually with Fidelity or, Charles
Yeah.
Schwab, something like that.
Yeah. Okay. So I had two that did that. I had one that was a teacher that she had gotten, she was no longer working there. And so she had a Roth, actually. Hers was a Roth that she then forwarded in. And then I had another guy who worked with Schwab. And it was interesting because I was told that Schwab would not allow his money to be put into real estate because Schwab doesn't do it, but they did it. And he invested with us as well. So we had, I mean, with those two people, the rest of mine were self-directed IRAs, but those two were coming from like a Fidelity type. One was Schwab and one was, I can't remember the name of the company, but it was another one that was not self-directed.
That's great. And I need to talk to you, see if I can do that with a little bit of mine. Thank you.
You bet.
And that's great information. So just for people that have asked me on bigger amounts, I'm not going to make this long, but like if it's smaller than your minimum and or bigger than you might expect, do you have recommendations that might be better?
You mean smaller than, so the dollar amount is smaller than, so our minimum is 25,000. So it would be smaller than 25,000, but bigger than 9,000, you're saying, right? Something like
Well,
that.
one that's, yeah, smaller than 25 and one that may be multi-million. What would you do with it?
What would we do with it?
You
Well,
guys
I'll
are
take the
super
multi-million.
I know, right?
I'll take the
You've got a
multi-million.
place to put that.
Uh, I guess to us it's situational. We do say 25,000 as our minimum. And there's reasons for that. It's probably situational for who we're talking about. So like I answer on 99% of my questions, it depends.
I knew that was coming. I knew it was coming.
It depends. We can make exceptions, but we can't do that all the time because it is kind of expensive to one, pull in investments that are too low. And we also get a restriction on number of investors. So if we took in a bunch of people at 5,000, which we would love to do at some point, we would be in a situation where we'd quickly have to create another fund and then another fund and then another fund, which is why we try for minimums, but we try to keep them low enough that people can still join. So it depends.
Okay. Thank you. Appreciate you letting me ask that question. And I like your new office.
You like it? Empire State Building? I'm gonna jump out the window with a parachute.
And for the multi-million-dollar one, we'll take it as fast as we can. That's what we'll do with
Yep.
that. Just got to guarantee me a 50% return if you can.
50 is what you want. Holy moly.
No guarantees in this business.
So Wynn had a
Okay.
question in the chat. I just wasn't sure if he's referring to the debt fund. He's asking, are you paying distributions without an operating property. So you're asking about the debt fund, Min?
Distributions without an
Yeah.
operating property.
Yeah, we give a monthly distribution on the debt fund.
Yeah. And it's against an operating property.
Yeah, so yeah, I just wanted to help clarify that for him,
Yeah.
but
So
he's
it's
not.
definitely it's a property in operations now, owned by us.
Yeah, it's backed by those properties that we are operating. Hopefully
Sean,
he's hearing that.
Okay, so just regarding banking, if you were to compare today to 1 year ago today and 2 years ago, how are the banks treating you guys today? Are they changing? Are they the same? What's been your experience as I'm going to be hopefully contacting, financing soon? What are you guys seeing that we should be preparing ourselves for if anything's changing?
When you say banks in terms of what, getting loans or
Just yeah, getting loans, whatever requirements they may have to qualify. Are they tightening up the regulations? Are they still the same as they were 2 years ago? Has anything changed that you guys have experienced?
I guess not. I guess we don't have an answer to that, Sean.
I'm trying to
I can't think of
I
any
mean,
well,
changes.
I'm
really
trying to
think what
understand the question, like
I
I
how
would
think what
recommend,
So,
Sean, I
what's
would recommend befriending a broker. That's what I would
what
recommend.
okay. I
what's
guess
probably
I guess
changed
maybe
what's changed more than anything besides it's not really the banks how they're acting, it's really more the market has changed in
sure.
terms of just how the economy is going and the rates and that type of thing. And I don't know that they've gotten. I mean, there's been a lot of talk about people about them tightening up that requirements and that kind of thing. But I mean, I haven't really noticed it that much myself.
Okay.
so, and I
So
think
so you haven't seen it yourself. I
yeah,
think I've just seen people speaking on YouTube that, oh, the banks are really clamping down and making it harder to get loans. So I just wasn't sure if you guys have had any of that experience personally, uh,
I think,
compared to other deals.
yeah, and I think Win makes a great point. It's just, having a solid KP. So somebody that has,
Yeah,
if you have no experience, right? Somebody that has solid experience, because that's what they do look for. They're going to be looking for, do you have experience? Sometimes do you have experience in this market? And if you have a solid KP who can like vouch for that and has the resume behind it, it to Tim's point, it's probably like there's probably no changes in the banking that you would notice as long as the person you're partnering with has a solid performance.
Sure. Okay.
Plus, I
All
think
right. I
too,
appreciate that.
Sean, that it may, and I don't know. I mean, I'm not, I don't know what you saw on YouTube or who you heard it from. I mean, when I think of like banking, I think of more retail, residential, small
yeah,
units. Like I go to
Sure.
my banker, but the lenders, like in commercial, that's kind of different, right? Because it's based on it's a math problem, right? When they're doing the numbers, they're
Right.
underwriting it. And so, I mean, we haven't, I mean, I think back to the deals that we took to the lenders, and I think that they hit the nail on the head with it. It depends on what you're bringing them as your net worth and your liquidity, and
Yeah.
then do the numbers work, right? And so, I mean, I think it's just math, right? I don't think it's anything because really there's more money. Fannie Mae and Freddie Mac has more money to lend than ever before. So
Okay.
they honestly cannot tighten up. I mean, I haven't heard that of tightening up only when the KP is not of quality. I did have that
Okay.
happen.
Gotcha.
Hmm.
Okay. Gotcha. Perfect. Well, thank you.
You're welcome.
Good question.
Sorry we can't see you and hear you at the same time.
That's all right.
And we do have a standing relationship with our banker, so just, it's nice to have that relationship.
Who has been on this call? We brought him on this
Yeah,
call
he's
before,
been
so
great.
we
He's
should
been-
probably bring him back. Just maybe he can help out with some of that stuff or some of those
I think
questions.
he enjoyed it. Yeah.
He did. He had a good time. All right. Why don't we roll into some deal flow? That was kind of the last thing that we wanted to go over. And again, this is really just kind of showing the whole process along. This is what we do. We do it on Tim runs through. 30,000 deals a day. It's insane, like how fast he can underwrite. Like it's just like a machine. You forget Chat GBT or Claude, he just knocks this stuff out. So
Yeah, those AI things just slow me down.
yeah.
Yeah. Oh, the
Well, they
engineers
do,
taking
because I
video.
sit there and argue with them all the time. I spend more time
That's
arguing than I
true.
do getting results. So yeah, I was going to run through real quick. I only got a few minutes here, so I may go a little fast, but kind of wanted to start out just kind of talking a little bit about number one, some deals that we've recently made some offers on, and then also some deals that we're looking at and possibly going to be making some offers on. Just to kind of really, this is more about giving you an idea of what we're looking at, what we're thinking, kind of how we go through the process a little bit on choosing the deals that we do and that kind of thing. Um, I'll start out in case you haven't been on this call before, you don't know much about our team when it comes to the multifamily part of it. This is our team. There's 5 of us, and all with various levels of experience in various areas, but we put together, makes us a pretty strong unit. We also usually talk about our track record of these numbers need to be updated. We haven't updated them since the St. Louis deal, but I guess it's 22 acquisitions now, 8 exits, 165 million assets under management, and I guess that would be 4,100 units. So, and you can see that our track record there has been an average of 27-month hold, 2.4 equity multiple, and a 56 IRR over those 8 exits. So just a good track record and good solid. As far as the portfolio goes, it's never lost any investors' money. Also, usually like to talk a little bit about how we go about our investment strategy. We target the right assets, so we want to acquire them under an optimized multifamily in place cash flow in a supply constrained Midwest submarket. So basically, that means in Kansas City and St. Louis, there's not a lot of new construction going on, so there's not a lot of additional product coming on the market. So that's good for existing properties. In Kansas City, it's exceptionally well. We execute based on our execution is based on the way that their operations that we bring to the table in terms of how we're going to operate the property. It's not necessarily just on the market timing or rent speculation. We try to be conservative, but we've talked a lot about our property management team, and so we rely heavily on them to control costs and find ways to generate additional revenue and take care of what we've got in a top-notch way. We do very conservative leverage, and then we make sure we have reserves built in, and we always look at the downside as far as when we test in our underwriting. The goal is to optimize the NOI as quickly as possible on our properties, and then for the most important thing to us though is that we are constantly concerned about the LP investments on this, and that drives our priorities on our deals. So just to get into that, first of all, I'm going to talk about the 3 properties that we have recently made offers on. I don't give all the details, but I'll give you enough to make it interesting. So this is a unit here that typically this was a lot smaller than what we want to go after normally. This is only a 26 unit deal, which actually surprised me because when I first saw it, it was a 7-story building, and I was like, wow, 7 stories and only 26 units. But what we found out is they did the current owners did a complete gut on this deal and redesigned it. It had 30 something units in it before, and they redesigned it with very large units. And so the average like 2-bedroom units are about 1,155 square feet, which are huge. But the other thing about this property, you can see under the location there, it's talks about it's in the West Park Plaza area of Kansas City. That is a top-notch area in Kansas City. If you're looking at the photo, if you're looking at behind you from where you're looking, there is the plaza, and this has views of that, and so it's a great location, high occupancy. It almost stays at 100% most of the time. At the time we were looking at it, it was 96%. And then these are the current interiors. We kind of felt like it maybe needed a little bit of sprucing up, but nothing real heavy. But anyway, the guidance on this was $5 million, which was the broker basically said they underwrote it to a 5 cap. But we actually initially on our underwriting came in We were at around 4.3 initially. Then we got a debt quote from our lender, the one we were talking about just a while ago, and didn't get a lot of favors on this one. The interest rate came back at 6.65%, which was unexpected on our part, and with no interest only period. And basically, the bottom line is, because this is one of those things where you might not realize this, but on the smaller deals, this is considered a small balance loan, and those do not get as favorable terms as a bigger property would. So that was what was driving that interest rate in the IO more than anything else. And so that kind of kicked this deal in the head for us. So we had to lower our offer all the way down to 3,775. Which at that, it still would have required about $2.3 million in equity raise. We had about 675,000 in CapEx planned. The idea is we were going to go in and do a real light reno to the 18 units, and then the top 2 floors were 8 units. We were going to do a high end, like a luxury type renovation to the top 8 units, and then plan on driving the rents a little higher on those top 8 units. And the reason why is because of the location and the type of tenants that are down there. You could get by with a little higher increase in rents, especially with the higher end units. So that was kind of the plan. And then we did have some operating reserves in the plan as well. But we did hear back on this one just recently, and we did not make it the best and final on it. But this is, again, give you an idea on, here's the property itself, and then you can kind of see this area here is the plaza. If you ever around Christmas time, if you want to see what this whole area looks like, every one of these buildings in this area have Christmas lights around it, and it's actually an event. They do a Christmas lighting, and we were actually planning on even looking at an event space on the roof of this as well. So thought it would have been pretty cool. But anyway, right now we're kind of out. We're still kind of kicking around some ideas on like buying down interest rates and that kind of thing. But at this point, we're probably going to be moving on from that one, because we just can't get to the price that they want. Here was another great property that we found. It's a 200 unit townhome community here in the Kansas City area, 2009, with renovations that were done in 2021. They even renovated the outside units. This outside look to it here is a great upgrade to what it would look like before. It's 95% occupied. Again, large units, 2 bedrooms at 1,400, 3 bedrooms at 1,500 square feet. The guidance on this one was 47 million, again at a 5 cap. We ended up, the underwriting on us, we ended up underwriting it at 39 million, which ended up being a 6.9 cap. The interest rate at the time, this was before the more recent uptick on the rates. We were estimating it at 5.8. Again, this wouldn't have been a small balance loan, so that issue didn't really hit this one as much. But it would have required about 15.5 million equity raised. We had about a 1.6 million in CapEx planned just to do some light renovations to all 200 units, and then we did factor in a $260,000 reserve on this one as well. So this had a great clubhouse and a great cool community, which you don't see in a lot of townhome properties, but this one would have been a great one. And again, we didn't make it to best and final on that one too, so we kind of passed on that one. Here is the next one that we looked at. It's a little smaller. This one is in the Overland Park, Kansas submarket of Kansas City area. 40 units. It's a 1962 build, which initially we kind of were just kind of passing on it until we actually took a look at the property itself. Even though it was a 1962, it's extremely well maintained property and looked really nice. Took care of it really well, and actually almost stays at 100% occupancy most of the time. Again, another one, I think I've only got 180 square feet. That's supposed to be 1,180 square feet. That's a typo. So again, another property with good size units that we were looking at. Guidance on this one was 6.8 million, which is another 5 cap. I got the wrong offer there. The offer on this one ended up being 5.7 million, which I believe was let me see.
I don't understand.
Yeah,
Is this still an opportunity?
We did not offer 39 million on a $6 million deal. So
No. This one ended up being a 6.46. So yeah, the 6.46 cap rate is correct. We offered 5.7, which is a 6.46. And what was driving that one, again, that small balance loan interest rate issue hit us on this one as well, 6.65%. But so when we made the initial offer, we were at 5.7. We made it to best and final. We were considering raising our offer until we realized that this interest rate and where we were at, if we raise it anymore, would make us a little bit too much negative leverage. And so we weren't comfortable doing that. So we ended up keeping our offer where it was at.
Tim, like when you say negative leverage, you're referring to what?
So basically that the cap rate, we didn't want to be too far less than the interest rate. The cap rate is basically what you can expect a property to return if you paid cash for it. So if it's only returning, 6.2%, but you're paying 6.65% in interest, you're basically negative leverage, which is not an ideal situation. What that means is basically in order for this property to be successful, you have to rely heavily on the value add side of that and raising rents and that type of thing. And that's usually not a good scenario to be in unless you feel pretty good. In this one, all 40 units need to be upgraded. And we really felt like, and actually because of the location of it in Overland Park, we really felt comfortable that we believe we'll be able to do that. Plus, it's only a couple of tenths negative leverage. So we feel like, that we're in pretty good shape on this one at this price. But that's why we didn't want to go 5.8, because we didn't want to make that difference even more.
And then one of the things that when I think about cap rate and interest rate, right? So cap rate is if I bought this property for all cash, my return is 6.46, right? Well, the bank's getting 6.65 if they loan against this property. So I am in a lower position than what the bank would if they loaned on the property. So there's your negative leverage.
Yeah. This one will require almost a $3 million equity raise. We've got about 570,000 in CapEx. Don't really have to do a lot to the outside of it. The roofs are in good shape. They're less than 10 years old. It's a brick building. Actually, they did do some improvements on the brick to that. It actually looks, it's a 1962, but when you're up close to those bricks, they do not look like they're that old. They look like newer style bricks, and they were really good shape. And then I got about a $46,000 operating reserve built into this one. So right now we're in best and final, waiting to hear where we're going for that one. So that one could be one of the next ones that we have. What we really wanted to do is the reason why we went after this one in that 26 unit, the idea was hopefully we were going to get them both and then we could couple them together and do a 2-pack and have like 66 units. But that's most things go in this business. It didn't work out.
Tim, Tony has a question about the average rents for class C and B in our market.
Well, price per
I don't know
unit.
what the average is. It's very dependent on the size of the property, the location of the property. And in Kansas City especially, it's very location dependent. If you're down on the plaza, it's going to be much higher than if you're in, say, the south central part of the city. So that's going to vary. It's going to vary widely.
You can just divide that, Tony, for the price per unit.
Yeah. Again, here's another picture of the property. Now, those are the ones that we have offers out on now. These are some properties that Teresa and I are going to tour next week. There's actually, right now, this one is part of a 2-property portfolio. They're almost identical properties in 2 different locations, but we're treating them as separate properties for the underwriting purposes. This one's a 48 unit garden style in the Kansas City market. It's a 2000 build, 96% occupancy, normal size unit as far as 1 bedroom, 2 bedroom. And again, we're touring this one on the 18th. It's got some separate garages for this one. So we'll see how this one goes. Hopefully we'll have some news on it soon. So this is one of them. And then here's the other one, which you can see it almost looks identical. It's 48 units as well, 2000 build, 98% occupied, same size units. Same breakdown on that. Touring that one on Tuesday. And then here's a property also in Kansas City area. It's in 1974, but was renovated in 24-26, 104 units, garden style, 97% occupancy. Again, 1 bedroom, 1 bath, 675, and 2 bedroom, 1 bath, 800 square foot property. It was been renovated on the inside. The interiors are in really good shape. And again, we're touring this one also on Tuesday. So we'll be deciding on whether we're going to offer on either of these, hopefully soon after that. So just as, again, if you don't know much about our group and kind of how we look at things, these are what we target in every deal. We look at these cash on cash ranges of 6 to 9%, the ROIs of 15 to 25%, equity multiples of 1.5 to 2.4, and then the IRRs of 15 to 20. So every one of our deals hopefully fits within that. Otherwise, good likelihood we're not doing them. Now, when I say, fits between them, I mean, these upper limits on these returns, we have that in there and people are like, well, why do you have an upper limit on it? Why don't you go as high as you can? Well, it's really, if you get higher than these kind of returns, it's very suspect, especially to sophisticated investors. And most likely you've probably missed something anyway if you're getting much higher than that. I mean, unless you're just really buying it at a ridiculously low price or something like that, which for us doesn't come along very often. So we don't set our ranges based on that kind of thing.
Hey, Tim,
Yeah, talked a little.
before you move on from there, can you talk a little bit, just from a high level, about our process and specifically your process when you find a property? I know it's overwhelming, right? Because we get so many. So talk about how you sift them out and when you really get down to, it's easy to throw them in a quick calculator, but you've got to actually run a lot of numbers when you find one that you think looks good.
Yeah. So typically, I mean, we kind of have some basic parameters in my mind. As soon as I see an email, I can kind of quickly, I'll usually look at the size of the property, and I'll usually look at the location of where it's at. And maybe just some general, if I know the area really well, and then I'll kind of look at the property too. Sometimes I'll maybe even drive by them because I'm all over Kansas City anyway. So I'll drive by most of these most of the time anyway. So I'll kind of make a real cursory review of it to see if it kind of fits our parameters in the first place. I'd say the large majority, I'll get, I don't know how many emails I get a day. I need to count that sometime because I probably get 100 or 150 emails a day. I'm kicking most of them immediately out. But the ones that look interesting, I'll kind of put them in a place in my inbox, and then I'll go back and start working my way through them. I'll start with the OM and kind of get the basic premise of it to see if it's a value add or a newer property, or if there's some kind of something in the OM that kind of looks like it's something that looks like there's too much hair on the deal or something like that. And then I'll kind of start looking at it, start maybe plugging some numbers in from a real high level view, doing kind of the back of the napkin type underwriting at first, just to see if the numbers are falling in line with what they have in the OM to make sure, those things are kind of meshing up. But I've done it enough now that most of these I'll go ahead and start downloading all the financials and all the information that they give you, put it into a folder, organize it by property. And then I go back and, I'll just sit down with them and I'll just start plugging them into my model. And usually I can plug one in and get everything as far as all the rent analysis done and all the financials in, expenses, income, and all that. I can probably do one in about less than a half hour, maybe 20 minutes, each property, unless it's just, now that's most of the ones we're looking at are between these 40, 60, and 100 units. If I sat down to do a 300 unit property, that might be a little different story, but I don't do very many of those, or don't do any at all right now. And so that's another thing. That's kind of knowing what your buy box is, know what your capabilities are. Because right now, when I see a 300 unit property, I know that means a really big equity raise, and we're not into that right now. So eventually we will be, but not right now. So I mean, I don't know if that answers the question or not, but I'll put the things in my model, and then I'll get an initial feel for where the costs are, if it's a reasonable expense ratio, see if there's something unusual there. I'll take a look at the T12s to see if there's any unusual trends or anomalies or that type of thing. I'll look at the rent rolls and see if the vacancies that's showing up there kind of match what they're saying in the OM. Just kind of looking for those kind of things to see if it's something I want to pursue further. And then after that, after I spend a few minutes doing all that, then I'll probably call the broker and talk to them about it and get the lowdown on terms of, why is the seller selling it, and then anything else that they want to tell me about it. And then come back and mesh that up. I might have to adjust some numbers or some things based on what I want to hear. And then if it's something we want to pursue at that point, then we'll start making tours. Because again, I try to make sure we look at every single property we make an offer on, because Teresa and I have experienced the idea that, or the experience where we've actually made an offer on a property before and then toured it after the fact and then went back and said, no, we offered too much on that one. So we had to back it down just because of the location or saw something that wasn't obvious in the information we had. So we try to look at them now because that is definitely, or it can definitely affect your underwriting. So that's kind of where we're at now on these other properties. I've kind of plugged them all in, got an initial analysis on them, but until we tour them, I won't put too much stock in the numbers yet. So, and then from there, we'll start having discussions about them as a team. Usually they'll come in and they'll grill me on all the what ifs and what's this and what's that, all the different questions that they want to know about the property and the situation and that kind of thing. And we'll try to come to an agreement on what we think an offer is. And then from there, if we decide to make an offer, we do the LOI and go from there and follow the process after that. Is that kind of what you're getting at, Teresa?
Absolutely. Perfect. Thank you.
Okay. I think I kind of talked about this a little bit already, and then a big thing about our business plan, typically what we look to do is, especially if it's a value add property, is we look to our main goal is when we buy the property and do the value add is to come in, do the improvements in the first year, drive the NOI up within that first 12 months, and then push the rents as much as we can in that first year to optimize that NOI and position the property as early as we can to then maybe in the year 3 start looking at doing either a refinance or possibly even selling. You can see in the beginning when you saw our average turn on a property was about 24 or 27 months. So there's been a lot of them that we've sold much earlier than even the 3 years. So, but depending on how the property is performing or what the market's doing, we make a decision on what we're going to do and go from there. So 3 to 5 years is kind of the time frame that something like that's going to happen. But we do plan to potentially hold it longer if necessary, depending on what, again, property and the market. But that's just basically our business plan on every property that we look at to start with. It's not to say that, depending on the situation, we might adjust that. Like if it's a newer property that doesn't have much value add, that could turn into a longer hold for us, maybe a 7 to 10 year if we really like the property and feel like we can get it. So anyway, that's kind of the thought process there. That's my update.
That was great, Tim.
It's fantastic.
1
As
minute ahead.
always.
You got 1 minute ahead too.
1 minute.
1
ahead,
minute for
and then-
questions.
Sean, you
Time
have Sean, you have a question.
Yeah, Sean.
Yeah, my question for you, Tim, is when you're doing your kind of napkin underwriting, do you ever see situations where the numbers aren't looking too attractive and you're kind of thinking about just throwing that one out, but have you dug deeper on those situations and then have it get significantly better than expected to where it's kind of worth the deeper dive?
Yeah, I mean, that actually happens quite a bit because my initial back of the napkin underwriting usually is around the operating memorandum or the offering memorandum. And
Right.
as you know, most of those numbers in most cases are made up anyway. So it happens quite often when you're using those numbers. When you dig into them and find out what the real story is behind everything, so I do that. Really what I do it for is to kind of when I do my underwriting, I have multiple ways of doing that initial underwriting. And so what it ends up giving me is a range of value from an OM type value to the actual T12 value to my acquisition year and their value, and I have that. It gives me the range. Basically, what I'm looking for is what's the maximum and what's the minimum, and I should be somewhere on where I land in between those numbers is kind of what I'm looking to do.
Okay. Thank you.
Yeah.
Any other questions for Tim for the group? Well, thank you, Win. We hope you come back. Told you it was the best call.
Stay tuned on those. So hopefully we'll have another opportunity. And if you want to get, the debt fund is a good way to get, if you're kind of waiting around to see what you're going to do, it's a good place to park some money, get a good return while you're waiting. And then, that's the good thing about us doing that is if we get one of these deals, we can give you the option of rolling what you have in that debt fund directly into this deal if you like it. If you don't, you can leave it where it's at. But it's a good way to go ahead and get, your money somewhere that can get to work as quick as possible. So anyway, just an option for you.
Absolutely.
That's another benefit of the investor platform, right? You can put your money in our fund and you still get to determine how you allocate those funds, whether you choose to go into a deal or not.
Oh, Henry, question.
Yeah, yes. Thank you for taking my question. Just
Yeah.
just a quick one.
Yeah.
And in case if we got a deal, we can bring it to this call.
Yeah, so we try to do once a month. We'll do like a bring a deal, help you evaluate it kind of call. So absolutely, if you have one and you want one and you want to talk through it and bring it here, 100%. Just reach out to me, Teresa, Tim,
Okay.
Laura, and we can set that up.
Okay, great.
So,
That's just good to know it. Thank you.
yeah, 100%. And then
Appreciate it.
Sean, I think you had another question.
Hey, I'm getting real comfortable here. Come up and I'll take the question.
Awesome.
That's great.
You guys are family now.
There we go. That's what we like
See
to
what
hear.
happens when I kick him off the call the first time?
That's
He can't get enough of it.
right.
You're gonna wish you
wouldn't-
did every week now.
Tenacious,
Get him out of here.
tenacious.
I've almost done it more than once tonight, Sean, because I am lowering your hand and I
Yeah.
go, oh, don't kick him out. Don't kick him out.
Okay, so for next legacy, what do you guys find is your biggest challenge currently today, as far as whether it's raising capital or sourcing a property to invest in? What piece of your investment group or company is the biggest challenge you guys are trying to work on?
Raising capital.
Raising capital. I
Okay.
think the environment,
Or none.
yeah, it is just the environment we're in, right? I think a lot of people got burned 23, 24, and they're a little hesitant. Again, not that we have bad deals, not that we don't have a great track record. I think they're just hesitant, but I think that'll eventually turn it around because when these properties start becoming better investments and everything's a cycle, right? It's up and down, it's up and down. And I think right now we're in that bottom, working our way back up. So I do think it's a little bit harder to raise capital than it used to be.
So when you get that objection,
Mhm.
what's your response to objections on that specific topic, with this environment we're in?
I think what Jason just said answers the objection in
That
that,
question.
yeah, I mean, there's ups and downs. I mean, that's real estate. And I
Yeah.
always go back to, I mean, do you know how the wealthy, the truly wealthy in our country make their money? They may have a business on the
They
front,
buy
but
right now, right?
they do. Yeah, they buy right now,
Yeah.
and it's real estate, right? I mean, they're
Yeah.
investing in real estate. Most people who are considered wealthy have real estate somewhere in their portfolio.
Mhm.
And I met with an investor the other day, and he has a screen printing company. He does huge screen printing for Nike and Under Armour and Lululemon and all the biggies. But guess what? He has a whole portfolio of real estate that he doesn't even really talk about to people because his big deal is the screen printing. So I think that's where, you lean on now's the time to buy. Everybody knows that, when it's situation where it's the best deal ever. And then,
Yeah.
you know, what's the track record show?
And Tim's displaying "Invest Like a Billionaire" on the
See
screen
this
right
book?
now.
This book
Yeah.
right here explains some things that I always knew were there, but I didn't know the data behind it or the research behind it. This is a book by a couple of people named Bob Fraser and Ben Fraser. They actually, what Teresa is saying is exactly right. The wealthy people, the wealthiest people, they still invest in other things, but a large majority of their, probably 60% of their investments are in alternative investments, and of the alternative, the biggest part of that is in real estate. But one of the things that they have in there is they talked about being in an asset based investment like a real estate deal versus the stock market. The volatility is the big thing. The real estate is not near as volatile. It's a lot more stable. Um, you got the volatility of the stock market where you have those large drops that happen from time to time. But the one thing I can never put my finger on, and it does in this book, is during those large volatility drops, when the stock market's coming back, you're losing that compounding effect of, because it's compounding on a smaller amount of money over the amount of time that it takes for that investment to get back to where it was before the large drop happened, as well as where your asset investment continues to go up during that. And basically, in the stock market, you never make up for that time frame while that compounding effect is not happening. So it actually proves that even though the overall growth of the investment may look like it doesn't grow like the stock market does because of that volatility and the compounding effect during those times, that actually your alternate investments, especially real estate, outperform every time in the stock market.
Right.
And they use it for tax purposes too, right? The
Yeah.
amount of tax benefits from real estate, immense,
Yeah.
right? That's where
Right.
they're most likely looking to save taxes.
Yeah.
Well, in my situation, not owning anything yet, I'm excited. I feel like I've got a really great opportunity to get in and find some deals. The Phoenix, Scottsdale area is said to be overpriced, and I think that's a wonderful opportunity to find someone who's going to become in distress. I feel bad for them, but a great opportunity for our company, and so we're really enthusiastic, actually.
That's awesome. All right. Any last questions?
Great stuff tonight, guys. Thanks so much. This was
Yeah.
super cool.
Thanks, Brandon.
Thank you, sir.
Always
Awesome.
love going on walks with you, Brandon.
Awesome.
Yeah,
We'll see
thank you
Well,
guys very much. I appreciate it. You guys were rock stars today. Tons of knowledge, tons of everything. I just wanted to say it's just greatly appreciated, and I know everyone here can just feels the same way. I don't even have to ask them. So thank you guys. I appreciate it. And sorry if I cut you off, Brandon. I wasn't trying to.
You did not, sir.
You're
Appreciate
welcome.
that, Tyler.
yeah.
Thank you.
I think we're just as thankful for everybody for joining every night too, because Friday night is a rough night. Look, we all want to go on our date nights. We all want to go watch Netflix, but you guys are here learning and studying and trying to get better. So that is awesome in itself. So we thank each and every one of you. Come back next week. We'll have more greatness to share with you, and appreciate every single one of you. Have a fantastic weekend and see you next Friday.
Good night, everyone.
Thank
Night.
you.
Night.
Night.